God bless America. Hello, everybody. I am the Talk Radio Protege, and this is the Protege Program. Welcome back once again. The tax plan from the GOP has been unveiled, and we're going to talk about some of the most important details as part of this video. And when we get done, I hope that you'll leave a like and subscribe. Let me know what your thoughts are in the comments. Let's get into it. So, the first and most important, most impactful thing that we need to talk about is the new tax brackets. On your screen here, you see the current tax brackets from Bankrate.com and the proposed tax brackets as reported by the New York Times. Under the current system, there are 7 you can count them there, brackets, an eighth if you include the standard deduction as a bracket in and of itself. Under the new system, there will be 4 brackets, again, a fifth if you include 0 to the standard deduction as a bracket in and of itself. Now, I included the deductions on there and then changed the way that the bracket is reported because of the way that the standard deduction effectively creates a 0% tax bracket. The way that the standard deduction functions is you pay taxes on your income, throughout the year. And then when you report your taxes, when you file your taxes, most people claim the standard deduction. You don't claim the standard deduction if you're a special entity or if you give an inordinate amount of money to charity, if you have a special occupation that, there's a few different ways that you can claim more money as deductible on your income than the standard deduction. There's a lot of deductions that you can count up as part of filing your taxes, and if you count up all those deductions and it's less than the standard deduction, then you claim the standard deduction. And so anybody that earns less money in 1 year than the standard deduction is going to claim the standard deduction and therefore get a tax refund of all of the money that they paid in taxes from the beginning of the previous year. So if you took out the standard deduction and put in the 10% bracket 0 to $18,000, then it looks like that group of people gets a tax increase going from 10 to 12%. But when you realize how the standard deduction works, what it does, and that it essentially creates a 0% tax bracket, then you understand that that's not the case. So looking at the way that these tax brackets break out under the new system, there are 9 brackets of tax rate changes. And as you see in the title of these slides, these are the married filing jointly rates. Now, as you can see, there are 4 groups of people who will see no change to their tax rate. There is 1 group of people that will see a tax increase. Everybody else will have a tax cut. As you can see, there are 2 double-digit tax rate cuts, and they're both for American households that are earning less than $100,000 a year. I think my household does fall into that range. I think in the previous under the previous system I was in the 15% tax bracket. Under the new system, I'll be getting a 3% tax cut. So this is just to demonstrate to you that this is not a tax cut for the rich in the sense that the Democrats and the media mean when they say the rich are getting a tax cut. As we talked about in a previous video, because we live in a progressive income tax structure, the rich get a tax cut even if you were to just do a change where you were to increase the standard deduction and change nothing else. The rich would get a tax cut because they could claim the standard deduction, and it would be an increase in their not taxable income, which would decrease the amount of taxes that they pay. So, again, just to point out, the biggest tax cuts go to households that are making less than $100,000 a year. For the single tax rates, essentially cut the income level numbers in half. The standard deduction for single filers will be $12,000. That first tax bracket will be $12,000 to $45,000. The second tax bracket will be $45,000 to $130,000. 35% will be $130,000 to $200,000 instead of $1 million, and that final tax bracket, 39.6%, will be for single income households, or I should say single income filers, will be $200,000 and above. So that is the tax bracket changes. That's the most important thing. That's the thing that most people will be talking about. This is what's most important to focus on because it demonstrates that this is not a tax cut for the rich tax plan. Again, the biggest tax cuts, the double-digit tax cuts, go to... One of the double-digit tax cuts goes to the married households that are, down there next to the poverty line. I've lived in a household that earned, around $30,000 in a year. It's kind of hard to survive sometimes on that kind of income for two people to live on that income. The biggest tax cut goes to the upper middle class group of people, the between $50,000 and $100,000 tax range is that kind of upper middle class area. That's where the biggest tax cut is going to. The third biggest tax cut is going to what I would call the lower upper class group of people. These are the kind of people that run small businesses. They're the kind of people that really deserve these big tax cuts. So I think, from the progressive mindset, there are huge tax cuts going where they need to go. From the conservative mindset, there are huge tax cuts going where they need to go. From my perspective, there ought to be tax cuts for everybody, except for, of course, you can't cut the taxes of people that aren't paying taxes. These should all be tax cuts. There should be no changes, again, except for that 0% tax bracket. Now, I wanted to talk about some of the miscellaneous changes. I'm calling these miscellaneous relief. It's places where the tax burden is going to be lessened on various places. The corporate tax rate. This is another great big one. This is one of the big ticket items from the president's campaign. The corporate tax rate would be coming down from 35% to 20%. I think the objective was 15% during the campaign, or maybe I'm just remembering 15% reduction. Either case, that's a huge one, the reduction in the corporate tax rate. That's going to stimulate the economy like no porculous Obama Congress spending package could ever dream of doing. Next on the list, the child tax credit. Oh, I should mention, Democrats are going and the left are going to point to the corporate tax rate coming down and say that's a tax break for the rich. But if my knowledge of the tax code serves me correctly, that's a tax cut for small businesses too. That's a tax cut for franchisees, which are effectively small businesses. That's, again, very good things. This means that chain restaurants will be hiring new people, which can go to young students or young people that want to develop working skill sets. This means that franchisees will be hiring more management positions, most likely, which could go to business management positions. Older young people that want to develop their management skills to move on to a bigger management position. It's an excellent, excellent cut. The child tax credit. Just an interesting one. It's another item that Trump has been wanting to implement. It's one of those things that Ivanka has been highly involved in, trying to offer tax relief specifically to families. The $300 per non-child dependent claim, I'm assuming, is for people that are taking care of older family members, which I appreciate. Mortgage credit. I just realized that doesn't belong on this slide. Neither do the state and property taxes slide or line. But, my mistake. I apologize for that. Mortgage credit is not relief. This is specifically not relief for the rich. Right now, you can claim as a deduction on your taxes the interest that you pay on your mortgage. So when you take out a mortgage loan, you have to pay interest to the bank. It's the fee that you pay to the bank for borrowing your money. That interest that you pay gets deducted off your taxes. That blurb is just in case anybody didn't know. The limitation that will be placed on the mortgage credit means that if you take out a loan on a home that's for more than $500,000, you won't get to claim all of the all of the interest that you pay on that mortgage. This is not going to affect anybody in the lower middle class or below. Middle class, upper middle class families, there might be some that are affected by this. All homes that currently have mortgages will be grandfathered in, is my understanding of this provision. The estate tax. This is a big one. This is one that conservatives want to see obliterated. For the next 6 years, I guess, I think 2017 is going to count. I have a feeling that that there will be a provision in the code that will allow it to retroactively apply to 2017, which would be fantastic. So if that's the case, then you'll have 2018 or 17, 18, 19, 20, 21, 22. 23 will be the first year that the estate tax would expire, the year after the estate tax expires. So if this provision is left in so that the estate tax will expire after 2022, this is going to sound morbid, but there'll be a lot of elderly people that want to leave a bunch of money to their families that will be trying to not die until 2023. But again, this is something big that conservatives want to see gone. It's one of those things where your money gets taxed when you earned it. It gets taxed when you take it out of your retirement. And then when you pass it on to your children, it ought not be taxed. Is just the conservative mindset on the estate tax. Now, the state and property taxes is another one that is not relief. Should have moved it to the next slide. I apologize for that. State and property taxes. Right now, you can't, if you have to pay state taxes, I think it's in addition to what you've already paid. I'm not sure if it's withholdings from your state tax, from your paychecks, are deductible from your federal taxes. That will be capped at $10,000 by this proposal. And believe it or not, this is another soak the rich policy. In high income tax states like California and New York that also have, I assume, progressive income tax schemes for their state income taxes, the rich are obviously paying a lot of money in state taxes. So they write that off of their federal income tax, where they're also paying a lot of money. If that number were to get capped at $10,000, then you'd have a lot of rich people that are paying now a lot more money in state taxes and will be now paying a lot more money in federal taxes. So, believe it or not, that's another soak the rich thing. It's not necessarily a soak the poor provision. I think that this is going to be, if it's implemented in its current form, it's going to cause tax reform in high tax states. This is not something that's going to affect people that live in low tax states, like Texas, for example. Other Midwestern states probably not going to see a lot of impact on that, but the coastal regions, probably Illinois, probably some of the Rust Belt states are going to see impact from this cap on the state and property tax deduction. And so, yeah, that'll probably cause some tax reform in those states. Now, this is the slide that those things belong on. I call it the miscellaneous burdens because it's the closing of loopholes. It's the reduction in way to reduce the amount of taxes that you pay to the federal government. And these credits are all eliminated under the current tax plan. Disability credit, adoption credit, tax prep credit. I assume that means if you have to pay an inordinate amount of money to prepare your taxes, then you get then that's deductible. Alimony credit and moving expenses credit, all eliminated under the current GOP tax plan. Now, one last thing that I wanted to talk about, and I don't have a slide for it, but it's a question that's been on the Democrats and the media's breaths ever since we started talking about tax reform. And that is, how are we going to pay for these tax cuts? First of all, hypocrisy alert. No, the Democrats will be calling on Republicans to, quote unquote, pay for these tax cuts because it's going to increase the deficit and therefore increase the debt. Now, Republicans have been all bark and no bite on the debt and deficit ever since the Bush stimulus package. You know, that was a Republican president that signed off on that package. He could have vetoed it, but he didn't. And that effectively put the Republicans in the position of losing fiscal responsibility. The Tea Party elected a bunch of Republicans that went to Washington for the stated purpose of bringing fiscal responsibility, and they didn't. So again, there's no hypocrisy from the Republican side except in past rhetoric. Republicans are already hypocrites when it comes to fiscal responsibility because they ran on a platform of fiscal responsibility and then didn't implement it. So the fact that they're passing a tax plan that allegedly is not fiscally responsible does not make Republicans hypocrites. Just to point that out there. That does not absolve the Democrats of their hypocrisy of they did not care about the deficit or the debt during the Bush stimulus, which Democrats wrote and passed in, I think it was 2008. They didn't care about the debt and deficit with Obama's stimulus packages, with Obama's jobs packages, with Obamacare. Democrats don't have a leg to stand on when it comes to fiscal responsibility. The last point I want to make about fiscal responsibility when it comes to these tax cuts is, what right does the government have to never decrease the amount of money that it takes in? I'm asking that question of any liberal or Democrat that might be watching this video. What right does the government have to never have to do with less? Individuals, families, companies, anybody that has to participate in the market has to deal with having less money at some point in your life. Especially upper middle class and down families, especially because these are families that probably raise their children on enough money. Their children then go off to live their lives, and they don't get to be to have their lives bankrolled by their parents or by a trust fund or something like that. So they have to learn how to deal with not having mom and dad's money. The federal government has never had to do this. The federal government exists in a perpetual state of growth, and it's something that conservatives at large don't agree with. What right does the federal government have to perpetual growth in money spent? Along those lines, what right does the federal government have to claim your income? Period. What right does the federal government have to 40% of a wealthy person's income? What right does the federal government have to 12% of a person with a modest income? What right does the government have to 25% of a person's income who's pretty good off? These are all questions that conservatives ask because we want to reduce the government's burden on the income of Americans. That's going to do it for this video. I hope you all enjoyed. I hope that you'll leave a like and subscribe. Hit the bell for notifications so that you don't miss a single video. I'm uploading every weekday. Let me know what your thoughts are in the comments about this plan, about your tax philosophy in general. I especially want to hear from each and every one of you. Again, thank you for watching. Until next time, have a fantastic evening, good night, and God bless.